Good morning everyone, welcome to Monday's free pre-market report. Well, a lot went on. I'm looking at the Euro Japanese yen to start on the daily chart. A lot went on last week. Obama's comments, which seem to have sort of lightened up towards the end of the week as common sense seems to have prevailed. But just to let you know, I discuss all this more in depth in the members pre-market report. If you're not a member, you can take a complimentary membership for 1 month, no obligation. We don't take any credit card details, blah 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 blah. So you can just go to our homepage, right hand side, scroll down, follow the link. All you need to add is an email, username, password. And I'm really going to go in depth about what we're doing in the markets. One thing that we think will happen, we think we're going to see more Japanese yen strength, as obviously funds are repatriated back to Japan and they come out of riskier assets such as the S&Ps, etc., and other riskier trades. Now, you know the level we're looking at, 126, 174. We've held it so far. If we get the break below, I'm not interested. Okay, with people say we've had a big sell-off from here. Yeah, that's certainly playable, but I'm looking for the break through here, through 126, 174. And as I've discussed several times, what I'm looking for is a move through this level like this, a retracement back to the level, get short there, bang, and then it comes off. Now, obviously, there's a few ways that you can do this. I mean, again, it's very personal. I mean, you can look for 1% move through this level, 126, 174, 2%, 3%. You know, it's very personal. It just depends on your risk and how aggressive you want to be. So it's Monday morning, so you know this is always a regular occurrence for me. Completely struggle to get a word out, which is quite strange because normally I can't stop rabbiting, which is London talk for talking a lot, which I do a lot. Other ways you can play it, you can put a sell stop, maybe, you know, like 20-30 pips below this level. That is a lot more aggressive because obviously, you know, you can put a sell stop, bang, and then another, and then as it comes through that level, you're in it, and then you put other you know, limit orders to sell above the market as it comes down like that. So you're scaling it like the noise. I wonder why I did that. This probably help describe the trade any better. But as you can see here, you know, there we got that spike lower, and then we came back into the box. So you know that's a bit more riskier. What I'll probably be looking to do is look for, you know, like a 1% move through this level and then sell the retracement, probably like scale in as it scales back up. I mean, always the good level is to front run the 126.74 level, 174 level by, you know, like 20 pips or 30 pips. So make sure you just front running it. Sometimes a lot of orders will be there, be difficult to get in. So if you're trading the indexes, you obviously want to be looking at the Euro Japanese yen. So goes the Euro Japanese yen. So goes stock markets, and a quick look at them, and of course, you know, pretty ugly again on Friday. And we're through the trend line, we're through the 50, we've got an 8 and 21 EMA cross. We're going to get obviously some, I say obviously, but we got some solid support levels back from December. And you can see here these levels, you know, this is going to be support. We're there now. On these levels, so I expect today we get a bit of support as we are now. You know, up nicely about 9.25 points. But what do I think from here? Well, we played it on an intraday short, and we're holding that. We shorted through the breakthrough of the 11.25 level, and so I bumped our stop down on a 60-minute chart to below, just above the 21 EMA, and we've just held it. It's been a massive trade. So now I'm just bumping my stop up on that to just above the 50. And so we got a nice trade there that all of a sudden has put us, you know, 25 pips in the money and more on Friday. But we're just really from here, that's an intraday play. We're just on a slightly longer term, a swing basis. We will see how we trade today, but I think certainly a trade back up to the 50-day exponential moving average, currently at 11.08, that can move, which is obviously the thick blue line here, could be a decent place to short. Because we've got sort of, once we get through, if obviously the S&Ps get through 1185, 1183-ish, then you're looking at, you know, the 200 at 1033. So a long way down. We have got actually on a weekly chart, we've got some support on the believe it's the 21 week EMA. Let's have a quick look. Yeah, 1075 is the 21 week EMA, and I'd expect us to get a bit of support there. But on a weekly chart, you're just sort of clinging to the uptrend. It's pretty obvious once we hit the 200 week EMA, we're going to get some overhead resistance, and everything that's going on with Obama and obviously the Dow Jones Global Index where it is. Okay, I hope that helps. I will discuss our setups, other positions we have more in depth in the members video. I look forward to speaking with you again tomorrow. Until then, happy trading.